Good morning, traders. Welcome to the official Trade Talk channel where I show you how I analyze price for the most consistent and higher probable entries to help you guys become better traders. How is everybody doing on this fantastic Tuesday morning, Tuesday evening, or Tuesday afternoon, depending on where you are? Hopefully, everybody is doing good. Saturday, we put out a video and we were discussing potential mean reversion. Well, we are slightly getting that. Today, to be fair, is the first day of the trading week, so we haven't really seen any bullish momentum to speak of, but we did get that bounce. The level that it bounced from was basically inconsequential. I didn't even want to really decide if that was going to be a good spot, but essentially it just bounced at the midpoint of this big breakout candle. So if I leave this like that, you can see that that wick low is right to the midpoint of the breakout candle. This candle is significant because it was the candle that made the first, the new all-time high. So that's what we pulled back to. We did take out the $20,000 level, which is something Bitcoin has never ever done before in its past, as far as retracing and taking out an old all-time high. But we were expecting it simply because once you start to get up there, as far as price-wise, it takes a whole lot of buying to continue on an asset to keep it going. And the more expensive it gets, well, the more unattractive it gets to specific investors. So we did get a pullback. When I drop down here to the daily time frame, you can see that pullback is perfect to the midpoint. So we did get long. We are long in this position currently, but we're only looking for a mean reversion play. So if you're new and you don't understand what a mean reversion is, it's just simply returning back to the mean. And there are several different indicators that you can use for, whatever you want to basically call a mean. You can use a 21 EMA or any EMA for that matter. It just depends on the time frame of which the mean you're looking for. The main one that most people use for reversion plays is the Bollinger Bands. And the brown line, or the median line, if you will, is considered the mean. But obviously this is going to change depending on time frame. So for instance, if you look at the hourly, you have already returned to the hourly mean, but you didn't get that far away from the hourly mean. So there's different indicators that you can use for this, but that's what we were looking for. On the daily, the Bollinger Band says $25,000 is the mean. So we're not looking for it to even go that far, to be honest with you. We're just looking for this thing to basically pull back a slight bit. You can see here, if I get rid of the Bollinger Bands, we are that median line is in the middle of the 21 and 55 EMAs. So yeah, I do believe that eventually it will get up and touch the 21 exponential. But here's the thing: price can trade sideways, 100% sideways, like it did right here, and that will eventually cause the mean to catch up to price. So when I say a reversion to the mean, I'm not specifically looking for a big bullish move. I'm just looking for a slightly bullish move at least. And we are getting that. So currently right now we're trading above the resistance that was holding price, and that is $20,000, $20,552. We have a supply zone coming up setting here at 22,120. Since we're so close to the supply zone, I would suggest that you just go ahead and watch the resistance itself, which would be the close of the bullish candle. I guess there is a few people that are still having difficulties understanding or identifying supply and demand zones. So briefly, we'll discuss that briefly, and then we'll move on. So a demand zone is under price, always going to be under price. So when price is moving lower, anything under it, any kind of specific level under that would be classified a demand zone, is going to be your last bearish candles open. The reason it's the last bearish candles open is because we know that there was more buying going on inside of this candle than selling, and we know that simply because the next day was bullish and closed above the level. So you not only got above it, you closed above it. So that tells us that in this day right here, the bearish day, even though it closed bearish, there was still so much more buying than selling going on that when the next day occurred, you just had a bullish move. So that would mark your demand zone. Now, this goes with everything in trading. Not everything works every time. So even if it is a legit demand zone, it does not mean that it will ever act as support, okay? These are just levels that we look for that to occur. And if it does, like if we start to get that bounce that we're looking to get, then we can trade that. But that's what demand is. Anytime you have a directional, a trend in one direction going, and then you get a reversal, well, when the reversal occurs, that tells you something. So how high does price have to go before sellers step back in or supply comes back into the market? Well, in this case, it doesn't have to be all the way at the top of a trend. It can simply be the last day that you had a bullish close. The reason for that as being supply is because your price is trending in one direction, and then for some reason, all of a sudden, this day closed bullish. This day closed as almost an engulfing bullish candle. So that tells us that this day here, even though it closed bullish, for some reason, there was more buying going on inside of that. And then that was immediately met with some sell side. All right, so you traded away from the level. Once you trade away from that level, that will mark that level as supply because that's where the orders were. That's basically where people started to sell. So if price gets up into here, we will start to take profits. We will move our stops up to break even, and we'll see what happens. I do have a video on supply and demand inside of the beginner traders tutorial playlist. So you can go check it out if you want. But that's it. It's just another form of support and resistance. Okay. But always remember your supply and demand zones will always be the opening price of the opposite candle. So if you're looking for a supply zone to be a sell side entry, you're going to use the opening price of the bullish candle, and the opposite goes for demand. If you're looking for that to be potential support, you're going to be using the opening price of your bearish candle, the last one, the last bearish candle, last bullish candle, something like that. So we'll watch and see what happens. If we go over here to the weekly time frame, you can see that last week was a monstrosity of a downside move. This is simply a long squeeze. So many people were trying to buy this consolidation up here that basically once we hit our bearish targets, which was this capitulation-ish wick, that's when everything crapped the bed, all right? Because that's where all of the stops were. And we were looking for that to happen based on a lot of other different metrics, open interest. We were looking at the trend score on Glassnode, a lot of different reasons why we were looking for downside continuation. And there's a lot of reasons why we're looking for a reversion trade, a return to the mean now. And so far that trade is up there in profits. Good morning from Amsterdam. Thanks for sharing your knowledge. You are the best. You are welcome, my friend. And Michelle says, don't forget to smash the like button. Yes, please. If you don't mind, I would love that. Thank you very much in advance. All right, so since we do have that monstrosity downside candle, we did penetrate the old all-time high. We traded as low as $17,500 on this push lower, and we are getting a slight bounce. Since last night at the Asian session, last night for me is 8 p.m. Eastern Standard Time. Last night at 8 p.m. Eastern Standard Time was the first time that we actually had an Asian Open this week. So London Open was at 3 o'clock. So this is when we're actually, for the first time this week, we're starting to get normal volumes, if you will, normal trading volumes. You can see that the momentum oscillator, the RSI, is showing us that we have a little bit more momentum than what price is showing us. So, these aren't, that's not really a great signal. And the fact that we're barely moving today, after we've had two sessions, the Asian and London session, it's got me a little bit convinced that this thing might not be heading up anymore, right? So we'll keep an eye on it. First level to watch would be that, and then obviously the resistance. So if you're inside of this long from above $20,000, you really want to see this thing get going, or you might want to close that position and look again. So this white line is the weekly open. It's last week's close, so that will mark weekly support until you get a weekly close below it. So we're going to watch to see what happens. But once again, you can see how that level was basically a lot of people were watching this level. So last night we were trading right at it when the Asian session opened up, and we wanted to see it trade away from the level. And so far that's what it's given us. but we don't have that bullish momentum. So basically one down candle like this size right here will put you right back into that level. And since you don't have any bullish momentum, it basically means either A, there's not a whole lot of people interested in trading this thing, which I can understand that, especially if they lost any money or a lot of money or all their money. So we'll just have to keep an eye on it. And that's what we do. Let's go ahead and check our volume profile just to see how the sessions have been trading the last few days. The point of control should migrate away, and it is. We have that. So this was the candle that broke down below the all-time high. You can see that there was not a whole lot of volume going on there. Now there was before, obviously, there was your volume that had that push lower. Then we set in this, and now we are starting to move away from those lows, and we definitely want to see that. So right now, your point of control for the last 2 days is around your weekly open. So you can definitely see that people are putting on positions here, looking to catch the low of this week. So basically what I mean, let's go ahead and turn that indicator off. Go back out here to the weekly time frame and look. You can see that even if you get positioned here and you have a bullish advance or a bullish expansion, then you will be pivoted, or you will be positioned pretty close to the low of that weekly range. And that's all traders do, right? We're all just trying to get into a position, and hopefully price moves away from our entry in the right direction to where we can generate a consistent profit. And I'm not really liking the volume that I'm seeing, or not really liking the price action that I'm seeing this morning. So let's go over here and look at the USD, because it has a lot to do with everything. You can see that the dollar is pulling back a little bit. We do have DXY support at 103.80. We'll see what happens if we get down in there. Obviously, this asset is still bullish, and we were looking for a slight pullback because we have divergence on the weekly. So you go here, you can see your weekly RSI. You closed last week above the previous resistance, and you also set in a new high. So price is moving higher, your RSI was moving lower. So a bit of bearish divergence going on there on the dollar. So we were looking for a slight pullback to occur. We are getting that slight pullback, but the asset is still bullish. So any pullback into support could potentially be looked at as a buying opportunity. And you can see that you have a pretty good distance to go before you actually get into weekly support. You could potentially use this down week's candle, or this closing price of support as well. So we'll see what happens. If it's going to remain to be bullish, I would technically want to see it just take out last week's low and then find support and start to trade away. So that's been the trend. We are coming up on the start of Q3 in 9 days. So that'll be the monthly close and the quarterly close. That will be basically when I start looking very hard for new positions. I love trading the quarterly opens and the monthly opens, because if you can position yourself at the bottom of, a fresh quarterly level or a fresh quarterly open, then you could potentially set in the trade for 3 months as price just goes away, makes you some money. All right, so we do have that bearish div on the weekly on the DXY. We are getting a slight pullback for the last few days. Daily support may hold, may not, but that's the level you want to watch for the near term. So if we trade down there during the New York session, which, there's a pretty good chance we will, then we'll wait to see if this area holds as support. So the next Forex pair, or that we want to look for positioning ourselves long, is USD JPY. The BOJ came out dovish again, which was not anything new. We basically knew that's what was going to happen. They've been dovish for so long, and that's why you've seen this just explode to the upside. And they're going to continue with their quantitative easing and everything else. So their inflation rate is still pretty low, so they don't have nothing to worry about yet. They can continue to be bullish for their risk markets. But right now, that would entail that we're probably going to be looking for bullish entries on the USD JPY. Now, the problem I have with entering it here is obvious. You're trading into resistance. and we don't want to get long in front of resistance. Just like we don't want to short at support, we don't want to get long in front of resistance. Today's range is very small indeed. It's basically just looks like Bitcoin, right? Very sideways price action. Bitcoin's drifting a little bit higher, but it's reacting basically the same way. The reason why this thing isn't exploding to the upside is because you have a dollar pullback today. Japanese yen is very weak. We can go over here and look at the currency futures, pull up Japanese yen. You can see that, well, it's not very weak. It's sideways weak. It's down 0.22% on the day. But that's why you're not seeing a big explosion to the upside yet, because the dollar is weak and the yen is just a little bit weaker. Those are the two weakest pairs on the day, or the two weakest currencies on the day is USD and JPY. JPY bringing up the weakest, or being the weakest. So what we're probably going to do on this, or on USD JPY, is we're going to wait for a pullback into support. Obviously, you can see that intraday support is pretty close to near-term price. And although I don't want to get long right there, you can see that there is a swing high there we can target for a liquidity push, or for price to push up into that liquidity. Let me pull up DailyFX's website. I could have been a lot more prepared for this, but I am not. So bright screen incoming. Bright screen incoming. All right, so basically if I pull up their sentiment meter goes on their brokerage, which is IG. IG is their brokerage. So they're partners with this data that we get. This client sentiment is from IG's customers, not Owanda's, not Forex.com's, just IG's. But since retail thinks alike, whatever the client sentiment meter is on IG, you can pretty much guarantee it's going to be similar to that of any other brokerage or exchange. And if we come down here to USD JPY, you're going to see that 74% of IG's clients are net short this asset. All right, 74%. That is a huge amount when it comes to FX. So basically what that means is you have retail coming up here and trying to get short right there. Why? Double top, resistance, you name it. There's probably 1,000 different reasons why, but I can promise you that you definitely want to be on the other side of their trade, usually, because they're usually wrong. So we're going to wait and see if this thing pulls back into support today, and if we do, we're going to ignore resistance. I would like a much deeper correction, like say down to 133.811 or somewhere in that region, then look for support for the long rip to the upside. With dollar being weak today, we might not get the move today, or it may happen. You almost did it last hour. You almost took out that liquidity, and that's all it needs to do. It just needs to get above that wick high. If you get above that wick high, you will start to see stops get destroyed. It will be retail, and this thing could get a bid and get a little bit higher. If the main market participants are looking to sell this asset, so let's pretend like retail is correct on this, they're just maybe a day early. Maybe this is the short trade, but not today, right? If you're one of those people, then what you can do is you can watch for the liquidation event. Once you get the liquidation event, then what you want to do is you want to see, do you get a bearish reaction up there, or do you get bullish continuation? The best way to do that is to watch on an hourly time frame, because it makes you become patient. I know a lot of day traders that watch my videos would rather me look at charts on a 1 minute time frame, because that's, they live their life 1 minute at a time, but I don't. And to be honest, I don't know many professional traders that do look at time frames that small, because they're not looking to capitalize on a 1 minute expansion. They're looking to capitalize on a 2 hour, 4 hour, or daily expansion, right? So watch it on an hourly time frame. If you get a bullish push and a close above on an hourly closing basis, and then the next hourly candle, you get a higher close, then that marks continuation, and you got to leave it alone. The trade was the bullish trade. If you get up here and you reverse hard with a big bearish candle, then you can watch this level for resistance. See if it holds as resistance. So on the retest, that's when you would want to basically deploy any short positions if you are looking for the short. With this being so high, 70% of clients are short this asset, 74%, I would say you're going to get bullish continuation. Excuse me. Most bigger market participants, your billionaires, your hedge funds, whoever trades FX, they are probably not looking to short the USD JPY, simply because USD, if you look at it year to date, is extraordinarily bullish, and JPY, if you look at it, is extraordinarily bearish. So you have the perfect setup, right? If dollar gets a bid, even a small bid, this asset will fly, because Japanese yen is weak and is going to continue to be weak, because monetary policy dictates how, bigger market participants position themselves. Although it is extraordinarily stretched out, right? I mean, it's hard to buy this thing when it looks like this. I understand. I don't like it either. I mean, this was the biggest trade of my life that I missed. All right. We were looking to trade USD JPY once we broke out above this descending channel, and we missed it, right? Because we were looking for a pullback into support, and we just did not get it. We broke out here, we broke down and closed below support. But anyways, I mean, that was a monstrosity of a move. Then you had a lot of consolidation, at least, what is this, April to several months of consolidation before you got this. Boom. So, I mean, we were looking to be long this last year. We just missed it. We have capitalized on a couple other ones, though. So, yeah, like GBP, JPY, we nailed that one to the short side. So we're, buying it up there. It looks a little bit crazy, but at the same time, if monetary policy is going to continue to be strong, we got a 0.75% rate hike on USD the other day, and JPY is going to be dovish. So look for support on the dollar. Look for support on the dollar. If you tag support and you hold support, then you're going to be wanting a long USD anything, really. But USD JPY is my favorite. So keep an eye out for that for support. All right. That's pretty much all I got. Let me go through here real quick and look at pound. Of course, I am long on this asset as well. I got long on this day right here during the BOE. Essentially, all I did is I waited for a big, long wick, and we got that here. We stopped out the downside of the market, and essentially all I did is I waited for price to get back above this wick or this line, and I just deployed a long position, and I used the wick low to basically manage my risk against. But if I do this, you're going to see that, that was a lot bigger of a stop than I normally would. But I was looking for this long trade, and it was a good one. So I am still positioned in that long with my trailing stop up to below this swing low right there. So if this thing does get bearish, it's probably going to stop me out, and then it could potentially go higher. But it does look like it's trying to go higher now. This is only going to be going up because of dollar strength. I can't remember what they did on the BOE. I think it was 50 basis points, which is 0.5%. So that's why it's bullish, but the dollar is just more bullish. So I'm expecting this thing to find resistance eventually. And the overall trend is down. So it's up to you. You know what I mean? If you want to be the bottom picker or just wait for resistance. And what I would do is just put a trend line up there and wait for resistance. Right? I mean, it sounds simple, but it is just that simple. And if you want to wait, if you want to be safe, wait for price to get above that, wait for it to break back down under it. Then you can look to deploy any short positions. But I do believe you're going to find resistance at anywhere between 124 and 128. So this region up in here is where I'm looking to take new short entries on this, simply because the trend is your friend. All right. Monetary policy also suits that position. I don't see anything on USD CAD that I like. Let's go look at oil. Oil had a big pullback 2 days ago. You can see that it broke down. This is good news for people that are paying $5 and $6 at the pump. So we seeing oil come off is always fantastic. It means it will end up being cheaper. So we are getting this pullback, but unfortunately, with everything still going on the way that it is, this could just be a buying opportunity. Here is support. That's what you're currently having or struggling getting under. But today's it's not a very big range. We're not seeing big ranges on any assets today. So I'm not quite sure what's going on. Why Juneteenth even has market participants out of the market. But this is pretty good time to look for positions. You can see that it's not doing anything. So if it's going to continue lower, then it'll probably do that after it takes out yesterday's high. That's typically the way these things operate. It's just market reaches up for liquidity, finds it by stopping out people, and then rolls back over. Or you could get a retest of this up in here, right? You got two potential supports or old supports. This one here at 114.81. Will that act as resistance? It's possible if price gets back up there. I guess one could watch this wick low as well. We usually target wicks. My strategy we don't take entries based off of wicks, right? We target wicks. Wicks are our targets. But it's possible sometimes they do act as support or resistance. But if you're looking for downside continuation, you definitely want to wait for the pullback. And I would rather short it at 114.81. That's obviously against the trend. Taking a short position on oil is against the trend. You're just now into the 50 on the 50 EMA, so 50 EMA is typically a decent place to look for bullish entries on the daily if you're long an asset. All right, so be careful taking short positions on oil. Let me go ahead and answer some questions because, like I said, there's not a whole lot to do today in Forex. There's just nothing setting up other than USD JPY. I think that's setting up nicely for a long this morning, but we'll be buying it right in front of resistance, which is something I technically hate to do, but it's the only thing I'm looking at. I am still currently long pound dollar. That is the only FX position I have on. I am long Bitcoin. So those are basically the two positions I'm managing currently on watch. Let's go over here to Euro USD real quick. You see that it is slightly getting a bullish pop today. Euro is the strongest asset on the day. There is daily res at 1.05490. Can we look for a pullback into support there? Maybe not. Maybe you get a wick down to old hourly resistance, which would have been that. So maybe you get a support check of that. Remember, we are eventually looking for the dollar to find support and reverse. So if that's the case, then we're probably going to be looking for this to find resistance and roll back over. But for now, we can look for long entries. 105.381 would be my absolute line in the stand. If you get lower than 105.381 on an hourly closing basis, you're leaving this trade alone. If it tags that level and trades away from it, then that's probably where I would want to take my long position. The problem with getting long there is you don't really have nothing to mark for your risk. So I might just leave this alone since it's not setting up like as a beautiful setup. A pullback all the way down to demand down here is unlikely today. All right, it's unlikely today because what you've probably already done is you probably already made the low of day and you're trading away from it. So you're going to be looking for a pullback and to support during the New York session, and you want to see this bullish rally continue. All right, greetings from Amsterdam. Oh yeah, I read that already. Thank you. I'm addicted to your voice. I listen to you every day. Thank you. Hello, Joel. Good morning, guys. 74% silver bullish, but nope, mixed. All right, let's go look at silver. Yeah, that's the thing on... Okay, yeah, I'm glad you said that. So if you're going to be looking at your sentiment indicators or your sentiment gauges, just understand something. Basically, everybody's always going to... So you're always going to have more skewed number to the long side on gold, silver, and Bitcoin, simply because those are assets that people like to hold in their portfolios just because... it's gold, it's silver, right? Everybody has gold and silver in their portfolio. So yeah, your sentiment is basically always going to be skewed to the bullish side. So you would think that you would want to be looking for a short on gold. And we were calling for lower prices on gold for months, and we did get that. So But as far as like trading using the sentiment indicator to decide whether or not taking bearish entries on gold or silver is not advised. Not advised. Because, like I said, a lot of people has those in their portfolio just because of what they are, right? But we go look at it. We'll go look at it. So because we were bearish on gold was because of real rates. Real rates, that's what had us bearish on gold. It's as simple as that. You can't generate alpha on gold right now, just 1% or so, but you're going to have to pay off that percent to get people to hold it for you, to pay those fees and stuff. So that's why we were bearish on gold. Silver pretty much just acts like gold a lot. You can see that you're trading sideways right now in a big range. The trend is down, and as long as you have dollar strength, as long as you're bullish the dollar, then you technically want to be bearish against it with any asset. So XAG USD is silver versus the dollar. So if the dollar gets strong, then this thing's going to roll over again. Sometimes I hear a lot of people say that gold and silver is heavily manipulated, but every single asset across the board is manipulated. If you take a position, long or short, you have manipulated the market. So, I mean, you can still trade it, right? If you're looking to short it, you want to short it around $22.31 as that is resistance. Don't just take a blind short there. Make sure you have a bearish reaction. Then you can look for your short side entry. But 22.31 is going to be resistance, and support of this range is far away. So you're dead smack in the middle of the range. You can go out to the weekly and see that you're trading at last week's open and you had a big pullback. So this is going to be the bearish target, but where does it find resistance at? I got daily res at 22.31. Weekly res is lower, 22.10. What does that look like on the daily? It's old daily res right there. Boom. And since this was a bull trap, that's the resistance level I would watch. 22.10. So watch this level here. If it's going to reverse, I would want to see it do it there. ARCLK entry point, please. ARCLK. I have no idea what this is. ARC. Okay. Don't know what it is. It is so bullish. Just very, very, very bullish. There's your monthly time frame. This thing is, man, 1, 2, 3, 4, 5, 6, 7, 8 months in a row of bullishness. I mean, but people are buying it because it's still going higher. I have no idea what this asset is. You kind of do have a near-term high because basically this bullish candle right here is being traded under. Now, the thing is it's super bullish. So looking to short a bullish asset means that basically you're taking the opposite trade of the trend. And just to make your trades work out better, I suggest trading with the trend. You can see how this thing had a big down day there. Closed below the 21, but did not close below support. That would have been support. It found support and then left. So you want to watch the same thing happen, but you've already closed below support. The lowest bearish close in this section of price is 77.50, and it looks like they're selling 77.50 on the intraday, right? So, I mean, I don't like it either way. I don't like it short and I don't like it long. I would have to basically, watch for resistance because the near-term order flow is down. But this is not a big, huge bearish reaction to say the least. This is, if anything, this down move is probably profit taking. So my best advice would be to wait for support. Where will support form? I have no clue. But once it does, then you can look for your bullish entries. This thing is very bullish. I don't know what kind of monetary policy is going on over here because obviously I don't live over there. But, we'll see. Yeah, just watch for support. You got a massive gap there. So, I mean, it's possible that gap gets filled and then it finds support. But if it's going to be risk off in this country, then look for your short side entries. And right now that would be 77.50 for today only. Today only. So you'd want to see an hourly tag that level again and roll back over. If you get an hourly close above 77.50, you're going to leave it alone. You're going to have to leave it alone. 1 minute is too stressful. For sure. I mean, listen, a lot of my videos in the very beginning when I first started the YouTube channel, I was showing people my entries that I was taking on 5-minute time frames. But basically all I'm doing is I'm finding the same levels that I look for today, looking for those levels. Once I have the level, I drop down in a 5-minute time frame and see how the 5-minute candles are acting at the level, right? So, yeah, I mean, I can nail top tick trades with the best of them on a 5-minute time frame. It's just I have a lot of experience is all. For beginners, I suggest that the lowest time frame you use is an hourly, because it builds character, it builds patience. You must wait for those hourly closes. So you won't just, well, I can't say you won't just dive into a trade and chase price, because let's be honest, that's everybody's trouble, most everybody's problem. Why they're unsuccessful is because they're chasing price. They can't be patient. But an hourly time frame can help you build patience, because you got to wait for that close, or at least real close to the close, before you take entry. USD, Turkish lira. I haven't looked at that in a long time. I think it's probably still just trading sideways. Let me go to the daily. Look at those wicks intraday. Yeah, I mean, it's not sideways. It's right back to being bullish again. Now, this was just a blow off top, but this asset is so weak compared to the dollar that it just can't get anything going. If I pull this chart out on the yearly basis, you're going to see nothing but bullish candles. I mean, that's a yearly chart, folks. Each one of these candles is 1 year's worth of price action. And for the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 years has been straight up. I mean, you're looking to buy support. I don't know what happened here that caused this blow off top. I mean, I know what happened. A lot of over leveraged longs in the market. And then the Turkish government steps in and does something. You get, 5 days of bearishness, and then it finds support. And you're right back up. So just watch for support. I mean, your support levels, you should know this. You've been following me for a long time, right? You know what I'm going to do. Support. Support. Support, right? It's as simple as that. You can look at the weekly if you want to look for swing trades. Well, there's nothing to look for on the weekly. It's all bullish, bullish, bullish. There's your old all-time high. Well, not all-time high, but you know what I mean. Your highest resistance level on the weekly. It acted like resistance when you touched it the first time. The second time you had trouble getting up, there's your breakout. Boom. Right? So watch for a pullback into that level. You get a pullback into that level on a daily closing basis. As long as you're not closing dailies below it, I'd potentially look to get long there. You also have a daily candle there. Now, this shows you exactly what, look at this. I mean, just look how price action acted at that level. This level was here before we got there, right? So, almost hit it this day. This day you did hit it. You got above it, but rejection. This is short traders taking shorts based on resistance. Here was the first bearish reaction they got. So if you took the short entry on the first day, you got a nice day trade to the downside, didn't you? Yeah, but then the next day, boom, gapping up. Big gap up. So this candle should have opened down here, but it didn't. It opened up there. That's a gap up continuation. So any shorts should have been bailing out of their positions when you're making, higher lows, higher low, higher low, higher low, higher low, boom, gone. Right? That's what we look for. That's like a real bull flag, if you will. But buying off support is the preferred way to do it. So you're going to be watching support. It looks like it's doing the same thing again up here. But wait for that support test. You just gotta. Oh, wait, where am I at? Thanks for the stream, sir. You're welcome. Rune USD, I guess it's just following Bitcoin's lead. Most cryptos will. The majority of them will. Yes. What'd you say? USD Rune? I just lost it. Rune USD. I don't know the ticker. Is it USD? Yeah, there we go. All right, here we go. We want Binance calculated by TradingView. Bybit, BitGet. You're going to hear me talk about BitGet a lot in the next couple weeks. I'm just now starting to get everything situated, but they don't have enough data on this. Let's go back to Binance or something. All right, so it's obviously bearish, along with every other cryptocurrency out there, except for maybe one or two. Right? There will be a couple outliers, but the majority of them are bearish. You're off 90%, man. Off the all-time high, 90%. I mean, everybody's trying to position themselves in their favorite shitcoin right now simply because everything is 90% off. It can still go lower. It can always go lower. Luna taught us that, right? Every single day, Luna was down 99.9%, and it did that for like a week until it damn near hit zero. So, I mean, this thing could still fall another 100%. But is it likely? Probably not. If you think this is going to mark the bear market low on Rune, it's highly unlikely that is the case, by the way, right? We're just going to let Bitcoin build its open interest back up, and then we're going to look to short it again because that's the trend, right? We took the long based on basically, a reversion trade, but most of these things are probably going to find resistance and roll back over. The bear market low will probably come once we have more data on CPI, because the Fed told us that that's what they're watching. They want to see a consistent lower CPI print for like 2 or 3 months in a row before they start to even think about adjusting monetary policy. And until they become dovish again, these assets are going to be looking for lows. So, I mean, it's cheap. It's $1.95. That's all I can tell you. It used to, back in its heyday, it was trading at $21. Is it ever going back to $21? Nobody knows. This asset could crash tomorrow. It just depends on, who the company, what they're doing. What's their balance sheet look like? Do they own a lot of debt? Is this a shit coin? Are they printing it themselves? Things like that. Crypto is the most speculative asset class in the world. So if you want to buy it because it's cheap, go ahead. But it could still go lower. Resistance is literally right above it. I wouldn't look for this resistance either. To short it, no. It's already been sold off so hard. I would probably want to see like a week or a couple weeks of a correction before you look to sell it again. So, and that could be anywhere from $2.50 up to $4. This area here. You got weekly res at 284, so I would watch that first for my short, or for a potential short entry, and only if it started to find resistance there. That's what it looks like. So I wouldn't touch this asset with a 10-foot pole. I don't know what it is. It's not something that I'm just going to buy and hold because I don't know what it is. But if you're just going to buy it and hold it for long term, like the next 2 to 5 years, yes, it's cheap. I would get it, and I'd get some now, regardless. I added Bitcoin to my spot holdings on that wick low, and I understand that it can continue to go lower, right? If it wants to hit 13.8, which is yearly res, we've discussed that level. I was talking about that level months and months ago. Months, like almost a year ago, I called 13 something as a potential support. So if it gets there, I'm going to buy more, right? I'm going to buy more because I know this bear market will eventually end, and I want to position myself at the bear market lows as possible, as lowest as possible, as close to the low as possible. Excuse me. I remember those 5-minute strats mentioned in CTM. I don't know if Jordan's ever traded on a 5-minute chart, but you might be talking about me potentially. But yes, I can trade on any time frame. Let's see here. ARCLK. Give me 1 second. Admirals, you use the same TA as Doopy Cash? Or Doopy Cash uses the same TA as me, right? Maybe he's had a YouTube channel longer. I don't know who he is. I've never heard of him before. So maybe not. I mean, technical analysis is technical analysis. Everything else is garbage. Like head and shoulders and cup and handles and all that shit. It's garbage. You can't get consistent with that. In order to be consistent, you got to become consistent before you can become profitable. You cannot be consistent if you're taking entries based on every pattern under the sun, right? You cannot. It's impossible. Find consistency, you will find profitability. And this strategy is the way to do it. It is the way to do it. I can sit here and show you days and days where I just top tick entries. Boom, top tick entries, top tick entries. And all I'm looking at is previous daily levels, opens and closes. That's it. Think about it. Back when trading on the floor in the 70s was a thing, the reason we even have charts today is because men were drawing bar charts on napkins. They wanted to know four things. What was yesterday's open, high, low, close? That's it. Trend lines, oscillators, moving averages, everything else that you add on to a candlestick chart is useless. I mean, I look at that stuff, right? But I'm specifically looking for the candlesticks because it's objective prices. Everything else is subjective. Trend lines, subjective. Moving averages aren't subjective because they're mathematical calculations, but you get the point. But maybe I do. Maybe I'll take a look at them. I don't know. Good morning, Heath. If not 22K, then 13K. 13.8. Yeah, 13.8. And it's just yearly resistance. That's all it is. It's an old yearly resistance. Right there. Boom. And that marked the top in 2019. Oh, right there. Bing, rejection. So that is the resistance. Old resistance. Will it become support? I don't know. 13,863, but I will be buying hand over fist if it gets there. Hand over fist. Is it possible to go lower? Like, say, 10K, 8K, 4K? Sure. Anything is possible. But I'll have my risk mitigated. My risk will be mitigated. So, yeah. AVE, please. Oh, let's go look at it. AAVE USDT. Oh, disgusting candle. Oh, wait. No, I don't want to do that. I want to do this. Let's see what we got. AVE's probably down a good 90% as well from the all-time high. 89.93. So almost 90%. Most of them are off 90% or close to it. So here's what you're looking at right now. You're trading inside of last week's range. Okay? So you neither have bearish momentum or bullish momentum this week. All right? So basically, there's nothing to take a position based off of looking at this. I mean, if price gets back down to 54,127, then potentially you could take a long entry there if you're looking to pick a bottom on AVE. If you're looking to pick a bottom, then watch 54,127 because that is cemented in as support. It's also going to be demand. Well, close to demand because this is your last bearish closing candle to the downside. So the open of that candle would be demand, 57,406. I would watch weekly support instead of demand, right? Because I put more weight on the higher time frame levels. You can't buy it now because you're into resistance, right? You're struggling at resistance today, right now. Not really struggling at it, but last 5 hours you've been trading at resistance. This is because positions are getting added here, whether they're longs or shorts. People are trading this. This is why I use volume profile. You can see right there is your point of control. Now, this point of control will change, right? It does change during the day, wherever the most volume is. But as of this point in time, in today's range, the bulk of the volume is trading at daily resistance, right there. So if you're new to the channel, welcome. If you're not, or, welcome back. But this indicator is how I built the strategy, right? I don't look at volume by time. To me, volume by time is one of the most useless indicators in the world, right? You don't know if it's bullish volume or bearish volume. We know what it is because it tells us, right? If I open this up, these numbers here, you see them right there, 111K by 705. That's how many contracts were bought at that price, or coins were bought at that price, and how many coins were sold at that price during this hour or these hours. So you can see that most of your volume is trading here today. Well, I don't need to use this indicator anymore because after doing this for so many years, I just know, and I'm trying to teach you guys the easiest way, right? Daily res. Why is it daily res? Because it's the highest daily candles close. Daily res. Back intraday, you're struggling. So if you're looking for near-term shorts on the day, which I wouldn't suggest it because order flow is bullish, but if you're looking for shorts, a wick right back up in the hourly res at 68,540, I would take a short entry. Stop above that wick high. Or if this trades up and gets above that and then rejects, then I would watch for potential short entries. But I think a short trade today is the wrong trade. I could be wrong. I don't have a crystal ball. I have no idea which direction price is going to go. But you are at daily res, and those are the areas on which I take my entries. Good morning, Heath. Good morning. Good morning. Good mornings. Yep, Aave. So, to me, I think Aave is going to do whatever Bitcoin does. If Bitcoin remains bullish for the reversion, for the mean reversion, then a lot of cryptos are going to do the same thing until Bitcoin becomes bearish again. On this asset specifically, I wouldn't even be thinking about a short position until we get right back up there. $77. And that's just because it was support. There's the breakdown. So am I going to short there on just when it gets there? No, but I will watch it and see if that area acts as resistance. And if it does, then I would be, interested in maybe taking a short position. And, that also puts you back at the 21 exponential. Yeah, it's simple as that. Right now, there's not a trade in my opinion. But if I was going to short it, I would probably do it there. I would probably do it right there. So this candle here, though, that tells you what you really need to know right now. Daily res, you trade into it, you get stifled, more bearish orders are coming in. You put in this candle here, the very next one explodes above. You coming in for a retest. So a short entry on this asset today is 68.54. Anything higher is a no-go. Anything lower is a no-go. And I wouldn't short it when the 5-minute chart gets in there. For instance, like if you want to use a 5-minute time frame, this is how. Daily res, hourly res, and then you drop down to a 5-minute time frame. And then you watch your 5-minute candles. And what you want to see is you want to see it trade up. You want to see it hit this and reject. Have another 5-minute reject. You get short, you put your stop above that level. And you just hold on. Once you've done that there's nothing else you can do. And then in 1 hour, if price isn't trading away from my position, then I just close it down because I'm probably wrong. A short entry should work roughly at the New York session open. So 9 o'clock in the morning, your short trade should be working by then, at least. If it's not, you're wrong on the day. So, I don't think I would do anything with Aave right now, my friend. EGLD, USD. Let's go look at it. And then this will be the last one. It's 6:30. I gotta get myself situated. All right, so here we are. Same exact pattern as Aave and Bitcoin and every other cryptocurrency. Let's see if it's 90% off. It's 89% off. It's almost the exact same chart we just looked at in Aave. And you can see that you're already above daily resistance on this one. So that right there tells me probably don't want to be short in Aave. Right? Because EGLD is already broken out above resistance. So your next area of potential Shorts, if you're short, will be 67.25. It's the last swing low. I bet your 21 and your 21 exponential is coming in. Oh, you're already at the 21 on this. So this one has a little bit more momentum than Aave and Bitcoin because you're trading up into the 50 on the RSI. So, yeah, I mean, if I was going to short it, I'd need to see how today closes first and foremost. I don't think the short will be today. If there is a short here, it'll be tomorrow. You need to see where today closes. And if it should, hopefully it closes bullish, then that's where I would be potentially looking for short side setups tomorrow or the next day, not today. Today, you're still stopping people out. You're still stopping people out because it's still going higher. Right there's daily res. Look how it acted. Got a ton of orders right there, just backed up. And then there's the expansion. So it's continuation. It's definitely not a trap, right? When you see candles closing higher, you just need one more to show you if it's continuation or not. So, I mean, we do occasionally take the liquidation trade above a swing high and then a rejection, right? Like what I was talking about earlier on USD JPY. But it's against trend, and they don't work out as often as just a simple buy the dip on an uptrended asset. Nothing works as simple as that. I mean, everybody's a professional on Bitcoin in the bull market, right? Everybody is a professional on Bitcoin. Now, they don't know what to do. They're all confused. Meanwhile, us over here, we killed that. We've been looking for that. We called the top. We love it. So we'll see what happens. But I just don't see a trade on it today. Tomorrow, yeah, probably. Or potentially. So what you want to do is basically give the New York session time to come out. You'll probably get a continuation up into resistance or wait for this resistance. Then you'll be above the 21. Then you'll be above the 50. But at the same time, I mean, if it starts to find resistance, then you could take a short on it. But trying to get short while you're bullish or the momentum is bullish, not the best thing in the world. But it does look like a short. It does look like a short to me. But just let it get there first. I can't short it in the middle of the range. Or we can go look at the weekly and see what it's doing. All right, so you're still trading inside of this candle. To be fair, you did take out the low here, and you're just getting bullish continuation. So there's that swing low. I would more or less watch this level instead because that's the weekly. If you do get up into this wick, you're probably going to push up into weekly res. And there's no weekly res here, but there's your last week. That's this week's opening price. And if it's going to continue to be bearish, then that's probably where I would look for the short. A weekly close above that, then and who knows where it's going. But I would look for the support entries, buying support. So let's just take a quick look at Bitcoin one more time and then we'll wrap it up. We're up 3% on the day on Bitcoin, which is nothing. Yesterday it was up like not even 1%. To me it's just not getting the momentum I wanted to see. You did take out that swing high though. So that's short traders are licking their chops right now. Right now. Looking for short side entries on Bitcoin because you liquidated that swing high. I don't think the trade is a short yet. It's so overcooked to the downside. I think this thing needs to retrace a lot more before we can look for the shorts. And here's the thing. If we know the Fed's looking for a trending lower CPI prints, then we can watch the same thing, right? If we start to see lower CPI trending lower, we get a lower than last month read this month or July, then August. If it's lower than July, then we know that. Then we know that we could potentially start looking for near-term lows or bottoms, for bullish entries. Because if inflation gets caught, if it gets fixed, these assets will be bullish again. I have no doubt in my mind. All right, guys, you have a fantastic day. If I missed something or if you have any questions, drop them down in the comment section below. And I will answer them. I always answer every question. I read every comment. So don't hesitate. Make sure you guys trade safe today. Make sure you trade smart. And as always, happy trading, everybody.